You're watching Masters in Trading Live with Jonathan Rose.
Hey everybody, it's Jonathan Rose and welcome to Masters in Trading Live. Masters in Trading Live, we get on here every day the market's open, 11 o'clock a.m. Eastern Time, go over the market, share a few tidbits, and once in a while we'll share our trade of the day. I was out yesterday. I got sick over the weekend. I'm one of those guys who probably years like, oh, I never get sick. But this weekend I got sick and I got humbled. And I'm going to give a big shout out to my Oura Ring. Are you guys familiar? I know these wearables are getting really, really big, but Oura Ring, it's like competing with the Apple Watch and a couple of other different wearables. I use my Oura. I like it actually. I use it a lot. But I use it to monitor my sleep. I use it to monitor my steps. It's got like all these different analytics that it shows you. But Saturday, before I even started feeling not great, my Oura was telling me that I was getting sick, which I just thought was really freaking cool. And I was able to tell because when I woke up, my resting heart rate from overnight was like 10% higher than average. And then my body temperature was higher, which I could see just through my wearable and whatever. So I thought that was pretty cool. This told me I was getting sick before I even felt like my body was getting sick. So I just thought that was really, really cool. Nevertheless, let's talk about the markets. Tomorrow, Fed rate cut, quarter point, half a point. What does it do? What's it going to do for the market? I'm going to show you my thoughts. It's going to be a little bit different than you're seeing on CNBC and Bloomberg. I don't want you to guess. I don't want you to speculate which way the market goes. Let the market work. Whatever the Fed's going to do, they're going to move rates probably a quarter, right? They're going to come out with some language. Then wait and see what the market's going to do. Because news comes out, it does increase volatility and uncertainty. So that is what presents the opportunity. The opportunity is not for us now to make a bet on the market, hoping that we're right after the Fed releases and the market moves. Rather, take a step back. Let the Fed do what the Fed's going to do. Let the talking heads do what the talking heads are going to do. Follow the market. If the market's super, super strong across the board, find things to buy. If the market's super, super weak across the board, find ways to protect your trading account. So wait. Don't try to get in front. It's very similar to how we trade earnings. How we trade earnings is we want to value how things have historically moved. We don't want to just speculate that a stock's going to come out with good earnings, so we're going to buy calls, or if stocks come out with bad earnings, so we buy puts. No, it's just not sustainable. So how I've always traded throughout my career is wait. Let the market move, and then around the market, that's where you'll find some valuable trades. Let's go over to the slide deck. We've got a bunch of things that I want to cover. Okay. Super excited to announce we're having our first 5-day trading challenge. So we've been working on this for the last couple of months, and next Monday, we're going to have our first group come into our 5-day options challenge. Starts Monday, September 23rd. So go ahead, mastersintradingchallenge.com. Go over and check out that video. There's a video waiting for you, and it'll explain all about the options trade challenge. The reason that we're doing this is we want to take somebody who's never traded options before, or someone who's traded options but is not so confident in how they're approaching their options trading, break you down, build you back up. You need zero options experience to get extreme benefit from this 5-day options trade challenge. So super excited for that. Check out masterthetradingchallenge.com and watch that video. Today, Microsoft announces a $60 billion share buyback. They're also hiking the dividend. The stock's rising. Yeah, no shit. Well, let's look at that. Right before the Fed is going to start lowering interest rates, right? It's like the next phase of the economic cycle. Before that, Microsoft decides to buy $60 billion in their share buyback. Not only that, they're hiking their dividend. This is extremely bullish news, not only for Microsoft, but also for the entire tech sector. Just looking at some questions coming in. Wow, interesting. Matt, that's a good idea. Last year, the end of 2023, I released a video, January maybe 25th, 2023, unveiling the ultimate stock of the year. You guys can go check it out on our YouTube channel. But the original trade was to buy Microsoft at like $250. Extremely, extremely bullish. I think this is one of the most popular videos I've ever put out on YouTube. This thing got like 200,000 views. So if you get a chance, unveiling the ultimate stock of the year for Microsoft last year. But let me tell you this, Microsoft continues to be uber strong. And also, it's become kind of a bellwether of AI because of their significant investment in ChatGPT. So here is Microsoft. These are just our expected move lines. Microsoft, every single time it gets a chance to buy, it's a buy. But this is just a really, really, really strong move. And why would they do this right before Fed? Why? Maybe they're doing this right before Fed because they're not going to have an opportunity to do this trade after Fed. Could that be a reason? Let's go to the Qs. Now the Qs, the NASDAQ, hasn't really done very much these last couple of weeks, right? I have it on a weekly right here. Last week's high, 476.53, 477.60. So right now, the last 3, 4, 5 weeks, we really haven't moved very much. And this is technology, but watch what happens if we go check out the broader market, and maybe we look at SPY. SPY is taking out its highs. Okay. I can't really control this too well. Nevertheless, I'm trying to do, there you go, a little line right there. Some of you guys out there may be like, oh, that's the triple top. The triple top. There's nothing more bullish than the triple top. I don't know if that's the case, but nevertheless, we have the SPY, S&P Futures 2, taking out highs. Not the NASDAQ, though. The NASDAQ is considerably off its highs because the NASDAQ was so much more expensive relative to the S&Ps. But I got to tell you, Microsoft's coming in right before Fed, increasing their dividends while also continuing to buy back $60 billion worth of stock. Geez, I don't know how much more bullish you can get for the sector, right? Okay, let's talk about gold and silver. This is a trade that we've been talking about probably the last couple of weeks. In front of you, this light blue line I have is gold, and the Jonathan. I was about to say the light blue line is gold and the gold line is silver. Okay. The light blue line is gold, and let's say the yellow line is silver. Going back to 2015, we're always looking at things relative to one another. Okay? The world is talking about getting long gold, right? It's silver, guys. It's not gold. It's not gold. It's not gold. It's not gold, okay? Right now, gold relative to silver. We're long silver. It's pulling back. The trade is to get long silver, not to be long gold. Any long gold, in my opinion, should be covered and exchanged for silver. We are at historical levels. You're walking into Fed. Fed could change this on an absolute dime. Silver is so historically cheap relative to gold. So I was out yesterday, dying on my couch, sleeping throughout the day, checking our Discord community. I want to make sure that everybody understands my passionate play here. My passionate play is long silver. Silver is inexpensive. I don't like long gold positions. I don't like long gold. When I say I don't like long gold, that doesn't mean that gold's not going to go up 50%. It does mean that silver is going to go up a lot higher, a lot more. And I don't think gold's going up 50%, but silver is cheap relative to gold. Okay? Gold is so expensive, gnarly expensive, like sucker play expensive. Here's a little chart I put together going back to a year and a half, a daily chart. We're just looking at silver companies, silver miners. We got PAS up there. We talk about PAS a lot. We have PAS, I believe, in our promotional portfolio. AG, MAG, SI is just silver futures. Silver futures are here. AG is probably the most inexpensive out of these. Actually, why don't we put this in the promotional portfolio as well? Let's buy AG at the market. I want to buy the stock. Why don't we want to buy options? We don't love trading options when stocks are trading so cheap in price. Let me see what kind of options we got on AG. I think the trade is just going to be buying the stock in AG. Oh, actually, no, it's not. We're going to buy the stock and we're also going to buy the options. Oh, these are awesome. I love these. Buy the stock. Okay, here's the trade. AG, we're going to put this in the promotional portfolio. We're going to buy the stock. Additionally, I like buying these 7 calls for 58 cents. And let's also, this is such a good trade. You could sell the 9s. I think we should sell the 10s. Buy the 7 strike for 58 cents. Sell the 10s. Can we sell the 10s for 20 cents? I think we can. I'm sure we can. That means we have 38 cents of risk, right? On a 10 lot, that's $380 of risk between the 7 and the 10 strike. The most that we can make is the difference between the strikes. So the most that we can make is $3. So in this trade, we're risking 38 cents, $38 of risk. And the ultimate that we can make is $3 minus that 38 cents, right? Also, I like buying the stock. Silver is just so incredibly inexpensive right now. It's a little bit different mindset. And the different mindset is stop guessing. Stop kind of crossing your fingers and thinking that the Fed's going to come out and if they do a quarter, the stock market's going to go higher. If they do 50, don't think like that. Let Goldman Sachs do that. Let the big banks figure where the market's going. We're small potatoes. We want to look for edge. Let the market move. What happens if all the tech companies scream higher, but you find a few, ARM and NVIDIA, decide not to go ahead because for whatever reason, those stocks were beaten down because some stupid hedge fund blew out. And so it kept the price down. That's what we want to do. Those are the trades that we want to find. Let the market move. Once the market moves, then find value around the movement. We just went back. That NASDAQ is trading at the exact same level it's been trading for the last couple of weeks. Wait, patience. The strongest position you can be in is waiting around with your ammo waiting to go in the market. I'm going to expand on this, talk a little bit further about it in our All Access. For everybody else,